Welcome to 𝐿𝐸𝐺𝐢𝐳.com, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on 𝐿𝐸𝐺𝢉𝐺.com. Welcome to
Holy shnikes, it worked.
𝐿𝐸𝐺𝢉𝐺.com, the go-to source for the latest insights.
Holy shnikes, it worked.
Holy shnikes, it worked.
Hey, folks, Bill and Brian here with a weekly update. Listen, we're glad you have joined us here at Energy Rogue. We are having fun today. We've been on an earlier podcast and had very deep and interesting questions asked us, and I think we gave some really light and not very deep and interesting answers. So we'll let you know what that happens later on. But today we'll be talking about natural gas. You know, it's been a little bit crazy, especially even just today. Isn't it crazy how natural gas in one day can go up and down enough to drive a trader crazy? as if that was not a pre-existing condition.
Very true.
So listen, we are with Energy Rogue, and you can find us at energyrogue.com. And as we go through today, be sure and ask questions in the comments, and we'll respond to them. And we're going to get started right now talking a little bit about natural gas.
Yep. So natural gas did drop below $2 this past week. And today it is having a very remarkable recovery, and it is up around $2.12. Now, part of this is due to the September contract rollover to the October contract. And that's really what represents this gap right here. So we'll cover that a little bit later. But what we're going to talk about today is some of the dynamics and some of the dynamics around natural gas. And there has been a consistent since probably last year that we are going to go to zero or the dollar store area. We have spent several trips below $2 that we were there just yesterday on the September contract. And so the question is, are we going to continue? So we put this presentation together. So we're going to talk through some of the macro. Let's start at a high level. You know, and the high level, a lot of people want to know what's going to happen today, what's going to happen tomorrow. At a high level, you have to understand what the North Star, what is supply saying, what is demand saying, the imports, exports, and storage. What are they all saying? And one of our new members, Ibrahim, if you're listening, hey, thanks, welcome in. He actually gave us great suggestion. We're going to try and use this as a template to really reinforce with our membership. And we are going to reference kind of the bullish bearish sentiment. We are not financial advisors. This is not investment advice. You can see the disclaimers below. So before I dive in, Bill, what's on your mind today?
Well, you know, the thing is that we're here and when gas is at its lowest point. And so it makes my automatic reaction is to become bullish. I mean, because we're down so low, and you know, the question you never want to ask as a gas trader or a gas marketer is, how low can it go? Because whatever you say, it'll go below that pretty much every time. But I think what we're looking at here is saying that there's a lot of things. Natural gas has changed over the years towards more of a global commodity. And so you have to look not just what's going on in the US, but what's going on in Europe, what's going on in Asia with the LNG, trying to figure out what's going on in Mexico and Canada. Canada, we've got an LNG plant coming on, so we may see our imports from Canada could go back. We could see our exports from Mexico increase. There are just a lot of different things that impact it. But a lot of the times, sometimes it's just local. I mean, if you are in a single basin, there are things affecting that single basin that you need to understand that are outside of the basin. So when I think of what's going on with natural gas, I think that what we're seeing right now is, see if I can use a correct term, the confluence of events that tend to keep it bearish, and will probably keep it bearish probably for a little while longer. But I still have a bullish outlook for the winter and for 2025.
Well, I think natural gas is saying
No. Strike me down in anger and I'll always be with you.
so. So listen,
I think I dated his daughter. I'm not sure.
oh my gosh. Richard, good to see you. And Rebel T, great to see you again. Hopefully I answered your question last week. And is it Powett or Powell? I'm probably mispronouncing, so apologies if I did or do.
I think you are mispronouncing.
There's a high probability there. So
I think you actually sometimes mispronounce Bill. I'm not sure how you do that, but
yeah, I mispronounce a lot of things. So we're going to go through the presentation part of what we're going to talk about today and natural gas price trends. Yesterday, we dipped below $2. The December contract is still above $3. Now, the October contract has recovered to $2.12, but the December contract is a dollar higher than where we're trading for October. So October to December, so 90 days, there's about 3 months at play. And the 3 months at play, there's going to be a reconciliation. Either the near term is going to get higher or the long term is going to get lower. If we take a look at 2025, I think it's higher likelihood that the near term comes up as opposed to the back end coming down. That is not that is my opinion. That is what I'm expecting. So it's really going to be a challenge for natural gas to come up, or natural gas is going to come down in the backside. So let's see. We do have some breaking news. Rebel T, sorry to interrupt, but news came off. Freeport volume suddenly dropped. Maybe a problem at a train. I don't have real-time flow. I will have real-time, or I'll have day behind tomorrow. So I will have that. I will say whatever is happening with the news cycles, this we would probably see it in the trading transactions. So I think it's more likely, Rebel T, I think it's more likely a blip. So that's my 2 cents. I will look at it after we get off this. But when you look at the price trends, October contract is hanging around $2, December about $1 higher. So either October, November is going to come up, or December, November is going to come down. So those are kind of the near term and long term directions. So let's take a look at supply and demand. Supplies are 12.6% above the 5-year average. This is what has been fueling the drop in natural gas prices, is looking at the supply side of the equation. Let's actually take a look at this. Over the last year in the fourth quarter, we added so much production, but I want to point out something. During 2023, I'm going to take out the fourth quarter. We bounced between 90, well, really 100. We were at 100 in January, and we bounced up to 102.8. So that is a pretty big growth. But what happened in the fourth quarter is that we popped all the way from that 102.5 to 105.8. But here's the rest of the story. We have been on a downward track since that time. Now, we have had periods where we went up, but periods where we come down. Now, part of this is due to curtailments. Part of it is due to decline. Every month, there is over 3.5 BCF a day of decline. Well, we're going to cover it here. And let's see. Oh, I really like. You are on target, Rebelty. Canadian imports have been high, so I was going to talk about that. You must have seen our slides. So Canadian production has been growing. This is the path since April. Now, when we have colder months, we typically do import less from Canada because they use more up there. But we have risen to over 7 BCF a day for this time of year. That is remarkable. And this is in preparation for the LNG exports. This is 𝐏𝐫𝐞𝐞 LNG is going to take out 2.5 BCF of that Canadian imports. So that's going to be solved for pretty soon. The lower 48 dry gas production stands at 102, 101.3, somewhere in that range. And demand is really the story here. When we look at the demand side of the equation, one thing that is really leading the pack is power. When we look at power, and everything I'm using in here is inside of our platform, Rogue Edge, which is only $89 a month. If you want access to supply, demand, imports, exports, storage stocks, so much more, you can get access to all of our charts, plus a weekly video, plus a weekly PDF for only $89. And if you really want to go to the next level, what do you do, Bill? You're on mute.
I did that because of a cough. When you want to go to the next level, you book a meeting with us and we'll sit and talk and we'll see how we can help you specifically to solve the problems that you have. And maybe it's not a problem. Maybe it's an opportunity. And we can help you learn how to take advantage of that opportunity.
Right. Right. So you can book a call. If you sign up for Rogue Premium, you get access to our Discord channel. Plus, we will meet with you personally each month. So that is available. That is only $179 a month. And this will bring everything that you want at the center of oil, natural gas liquids, refined products, electricity. And we cover imports, exports, storage stocks, so much more. So let's get back to this. Electricity, as you can see, is about 2 BCF higher. So Rebelty has a great comment right here. Canadian imports are almost 2 BCF a day higher than last year. Power is about a B.5 higher. Plus, we have production off a little bit from last year, depending on whether you're looking at daily or weekly averages. LNG net flows are 12.7 BCF a day. That is down 1.6 week over week. The electric output has been rising over the past several years. Now, one note, last week we increased our inventories by 35 BCF. I want to show y'all something. And this has gone unnoticed by many people. And this is something I have mentioned on live streams before. But if you can look at this chart, which is one of our 150 charts, which is only $89 a month, sign up below. Or if you want help with your strategy, just sign up for Rogue Premium at $179 a month. In March of this year, we were 330 BCF higher than the 5-year maximum. So as we know, storage goes into the ground during the summer months and it gets withdrawn in the winter months. We have made up over 330 BCF from March to August. So that is 330. That means on a seasonally corrected basis, our supply versus demand has been 330 BCF a day tighter than it has been over the last 5 years.
Whoa! Wait a minute!
I know. So this is where we take a look at the supply demand. I like that one. That's one of the best movies. If somebody hadn't seen My Cousin Vinny, it's one of the best movies around. So this is one of my favorite charts. This is net supply versus demand, and dry production. I took dry production off. This is supply minus demand. So during the summer months, it is going to be above zero. In the winter months, below zero. But I'm taking this back to 2019, pre-COVID levels. Supply versus demand. And if you notice, you will see that we're slowly shrinking. That means supply versus demand. We are not as oversupplied as people believe. And it has to do with the demand side of the equation. Many people look at the supply coming in from Canada, the supply that we've added to the equation. But a lot of people are missing the fact that in 2019, our dry production was 90 BCF. Think about this. And our net supply and demand was a lot higher. We now produce over 102 BCF or 101 BCF, and our demand is actually soaking it up. So
I think what people don't understand is that the demand on natural gas is cumulative. It's not something that happens and then goes back down, happens and goes back down. We have been increasing demand for natural gas at a rate of about 3% per year.
right.
And so that means for basically for the last 5 years, we've increased it. This is really easy math, 15%. But think about it this way. That means that even though we show a lot in storage, that is an anomaly of 1 year, and that we need more in storage every year to be able to meet the demands in the winter. We need more production and we need more in storage. If you see the production numbers going down, the only place we have to replace that gas is storage.
Right.
And so what you could see if you saw production go down, you would see storage begin to tail off. And you could actually see withdrawals in storage earlier than expected. Or in this case, I would expect that we would see withdrawals from storage go longer beyond March 31st. And that's when you start seeing the indications that demand is overwhelming the supply.
Right.
And that's what I think this chart shows.
Yeah. No, I completely agree. I do want to take a second, Rebel T. I really appreciate your questions because they are on point. You are really studying the right things. Rebel T says, I just don't understand why we need to import more while U.S. producers need to cut, import less, and let U.S. producers make the money, right? Now your import is at max and production needs to cut with delay. So one of the factors here, put simply, Rebel T, is that Canadian production is priced lower than US production. So it's a pricing game. So they'll export to the US for less dollars than US producers demand. And I know that
And
sounds
that is why they built the LNG facilities, to be able to get more for their gas.
Yep. Yep. So that's put simply, and feel free to reach out to us and connect with us if you want to talk about that more, because that is kind of a deeper dive into the logic. But this is another one. Storage is just filled up in the plus and not the negative, only because 1,000%. And this is actually, I don't know if you listened, but we did this on the live stream a couple weeks ago, where that Freeport accounted for close to the Freeport closure in 2022 accounted for probably 220 or 200 BCF of overhang. So so that is really key there. But the fact is, we have made up a tremendous amount of storage ground. Now the market is still saying you need more, you need more. But the fact is demand is leading the equation. And LNG, we're supposed to open up LNG. Wasn't Plaquemines fourth quarter, Bill?
Yes, their expansion, we're supposed to start taking gas in the fourth quarter. It won't
Yep.
be at full capacity till sometime in the first quarter of 2025, I think, maybe even second
Yep.
quarter. But they're
Yep.
going to start taking gas in the first quarter. They take gas because they got a lot of testing to do. But
Right.
once they get it up and running, that train will be going, and that's a I think a 1.5 BCF expansion, if I remember correctly.
Let's look. The timelines are off, but I do have it on the demand side here. Let's look at what the Plaquemines is. And this is part of, I'm going to be shameless for a second. This is part of the reason we put this platform together so that we could understand relative changes in the marketplace very quickly, and we could go through this. So the new Plaquemines, let me take off this, and this. Okay, so we're currently expecting 1.7 BCF on the first one, and then shortly after that in 2025 is an
Just under a
addition
B.
of, roughly about 2.5 once both are on. So you can think about it this way. When you look at the United States, we're going to have more exporting out of the Gulf Coast. Now, getting into international waters, do they need it? Do they have enough regas? That's a different equation. That's not the topic for today. But I would assume some of this goes out, maybe a BCF. Then in conjunction with a BCF to 2 BCF off from our imports from Canada, I think the mix is there for a lot of fireworks to happen on the natural gas price.
And we'll have
So
to look at an update on the Mexico one because I think it's also scheduled for late 2025. I think I saw a note on about a delay on it, but we can take a look at that because that will increase the Mexico exports
a delay on which one?
on the Mexican LNG facility.
Oh, okay. Maybe so. So current inventories are 7% higher year over year and 12.6 above the 5-year average. I want to point something out. When we go back to that March date, we were over 35% above the 5-year average. So we have made up over 20% on this on storage. So that tells me supply, yes, we have a lot of supply, but we have a lot of demand. And it is part of the reason we did start an offshoot that is going to be is free right now, wxrogue.com. This will show population weighted cooling degree days for the Pacific, West, South Central, Middle Atlantic, West, North Central. We are going to launch this into a paid weather product for energy and ag markets. Plus, we have the 5 largest populated cities, and we have some information out here. So if you're looking for weather and you want kind of a general sentiment, if you're trading natural gas, look at this on Sunday because it'll tell you likely what direction the market will open up. So now on the inventory and storage, we aren't replenishing our drilling activity. It continues to drop. So we're at a 3-year low of 97 gas rigs. These are more efficient. They are bringing more gas online, however, per rig. However, there's increased cost with these. And if you look at the different producing basins, Permian is the low-cost provider of gas. Outside of Canada, Permian gas is a waste product. As a matter of fact, it's currently priced negative. So people are paying to get rid of it. So when you look at it, nobody is drilling for natural gas right now, which means on a 3.5 BCF a day decline, we're replacing about 3.2. So
And as long as the price stays below about $4, that's going to be the situation because these big gas fields can't come on below $4. And when I mean $4, I don't mean a day price. They need $4 going out for 5 years to be able to uh, finance these large wells. Now, it's not because we're running out of gas. We have plenty of gas. It's a matter of being able to get it out of the ground at an efficient manner. And so
Yep.
that pricing is where that pricing comes in.
Yep. And let's see, Rebel T had another great observation. Really, really appreciate this. And Rebel T, this is what we talk about in our Discord community every single day. We talk about everything that you're bringing up. So it is brought up from our community, from our basis. So if you have interest in that, reach out to us, let us know. Do we think the extra LNG coming will indeed put exports higher than it is now? We can't even stay at 14 BCF. I would put it this way. There are very few times that we're running full tilt on LNG. During 2022, we ran full tilt. And that was because international prices were up above $80. So a lot of it depends on that arbitrage.
And let's think about the geopolitical thing that was going on right then.
Well,
That was right.
Hold on. Let me finish one thing and then get to geopolitics, because that's going to be a whole nother rabbit trail. The other fact of the matter is that while we've been building LNG export facilities, we also internationally in around the globe have been building regasification. So currently, LNG export facilities were leading the pack and providing too much export capacity for the pace of regasification facilities and ships. And that's something we brought up about a year ago that Bill identified. Now, with the delays in the US, Mexico, Canada, and over in Australia, regasification is catching up. I don't think it's going to catch up 1-to-1, but if we have, say, 5 BCF of capacity, added capacity anywhere, 2.5 will flow. Now, will it flow from the US? Will it flow from Canada? Will it flow from Mexico? That gets a lot deeper. So,
my thought process on this, Brian, though, is that this will be the first year that we will have zero gas, that Europe will have zero gas coming from Russia.
Right.
And so that gas has to be made up somewhere.
Yep.
And now there's been some demand decline in Europe because of their manufacturing processes going down. But I think that's why we're going to see the LNG continue to increase out of the US, because all in all, the gas coming out of the US is the cheapest gas that Europe gets.
Right.
As far as LNG. So I think that's why we will be first on the list. And then after that will probably be Qatar, maybe.
Well, Qatar is the low cost provider.
Right, but their ability to get it out seems to be limited at the moment.
Yeah. And let's see, Rebel T, I will get back to this. I'm going to walk through a couple things and walk through what we do here at Energy Rogue. It might seem complex. The energy market is always a complicated matrix. And what we try and do is we try and look at supply, demand, storage, imports, exports. We look at the matrix, and the matrix of this is really going to tell you whether or not we're undervalued, overvalued, and you can arrive at your solution. And this is what we've spent the last 10 plus years trying to figure out. How do we determine the market direction? Fibonacci. So there are technical analysis factors, there are supply factors, demand factors, fundamental factors, technical analysis, moving averages, convergence, divergence. There's a lot of different ways. And here is a step-by-step guide to help you. There is a link down below that will go into this much, much deeper. And it is a 40-minute webinar. So click the link below. And it is the $1 billion trading system. And it has to do with step 1, fundamentals. You got to understand fundamentals if you're going to trade natural gas. Technicals, understand the technicals. Many people that trade natural gas already understand technicals, but many skip over the fundamentals. Now, many believe in a school of thought. The technicals incorporate everything that you know, having worked at large trading shops such as Chevron, Louis Dreyfus, Sumitomo, I can tell you a lot of times the technical only people will miss the big plays. And the big plays are what can really make you. So that's not it, right? It can't be that simple. 2 steps? It can't be that. Hey, it is. Fundamentals, technicals, and drum roll, please. Remember number 1 and number 2. So, oh no. Rebel T, I'm coming back to your question. These are good. These are excellent questions. I selfishly, I want you in our Discord community because these are very thoughtful questions. So when we look at number 1 and number 2, what do we look at? We're not financial advisors. It's not trading advice. Bill and Brian. So we created Energy Rogue in 2021. Why did we create Energy Rogue, Bill?
You know, we were tired of people having to overpay for information that they needed. And it really was, for like, our mini rebellion against the status quo. That's the rogue part of it. Of the status quo of people overpaying for data when they didn't have to. And
Right.
so we wanted not only just to provide the data, but also to provide insight into the data. And that is why we formed Energy Rogue. And besides, Brian and I like working together.
Yeah. Some days. Haha. I was waiting for your snappy comeback on that. Where's your snappy comeback?
Sounds like somebody's got a case of the Mondays.
Oh man, not that snappy I got that.
So after years of trying to understand the markets, because we have worked in the energy industry around hedging, trading, and physical on understanding the market, and what we realized is this shouldn't be just for the big guys. And fundamentals, technicals, that's it. It can't be that easy. Well, it does require work.
I was going to say, Brian, you're taking long.
Forget about the curveball, Ricky. Give him a heater.
All right. So the webinar is going to, I'm going to skip over this because the webinar, I would love for you to join the webinar. It's down below. It's about 40 minutes long. So make sure and grab a cup of coffee because it is just me talking, which means you might end up falling asleep. And by the end of it, you may.
But I really don't like it. And I'm not going to go.
So anyway, so what we do is we take a look at a cheat sheet, and this is a very valuable matrix that we put together, and we're now going to start to provide it to our membership, and where we look at supply versus 2023 versus last week versus a month ago. Electric, where were we last year? Where were we now? Residential, commercial, industrial, all of this impacts supply and demand. And if you are not looking at these layers, something will surprise you. And imports, and this gets back to Rebelty. Okay, if we increase, we're currently have 14 BCF of capacity, actually above that. We're only at 12.8. So if we add capacity, is that going to truly add to it? Well, you have to remember each one of those capacities is owned by different people. There are different drivers and different reasons. And so those different drivers and reasons are a different element of thought process. And so you can't just say because we're not at 14 doesn't mean the expansion capacity is going to open up.
Well, and the other thing on that, Brian, is that a lot of that stuff the gas is sourced out of the Permian. If the Permian's got a negative price, they're not putting gas in the pipe. These guys are not going to have supply. So they have a tendency to be a little supply risked. And so those are the kind of things we look at. And when you look at this cheat sheet, you also good to pay attention to the numbers, because when you look at electric, that's very bullish, and you look at industrial, it's a little bit bullish. We didn't put that annotation in there. So all you want to do is be able to take a look at this and say, oh, well, yeah, that's a little bit bullish, but when you look at electric, you go, whoa, man, that's where it's really growing, and it's growing mainly because of these server farms. And that's another thing you need to look at.
Yep. That's exactly it. And now Rebelty, I am going by the way the name is spelled out. If I'm saying it wrong, let me know. It sounds like I am. Apologies. So so listen, I'm going to get back to what Rebel or Rebelty. I'm not sure what you prefer. Just tell me what you prefer. I'll do it. Um, Rebelty is saying my concern about demand growth is that it's primarily based on hotter summers. That is 1,000% true. But here it comes. This is and will be balanced out by having back-to-back warm winters. And to your point, Freeport. That was another aspect of that equation. And when we look at the demand side of the equation, we have had back-to-back warm winters. That is expected to be different this year as we transition to potentially or likely a La
La Nina.
Nina. Yeah. And this is also where our Discord group, we actually have a complete weather channel. And in this weather channel, our resident weather expert, Brendan, who sometimes joins us on this, really focuses on all kinds of weather, whether it be tropics, whether it be that this is going to be interesting. This is a degree day outlook, and that degree day outlook is going to give you a perspective of what's coming down the way. But when you look at this, I think a warmer than winter, warmer than average winter, maybe it's average over the last 20 years, but it's definitely going to be, well, I shouldn't say definitely. It is very likely going to be much colder than the last two winters. So, so that is what we are looking at.
You guys, this weather product we got, the reason we are associated with Brendan is because he brings a lot of this stuff down to a level at which you can understand it. I know when you look at some of this weather stuff,
feeble skills are no match for the power of the dark side.
I know a lot of weathermen are like that, but Brendan brings it down to a level, and we've taught him a lot about natural gas and what it affects. And so this is one of these things where we've formed a partnership with Brendan that begins to more specifically talk about how the weather is going to be affecting natural gas.
Yep.
And that's why we went with degree days. And if you look at these, it's populated.
Population weighted. Yeah.
Yeah. And so what that tells you is where natural gas is going to be burned. That's why that's important. That's extremely important to know what those degree days are.
Right.
So this is a real start for something that's going to be a little bit different. That's going to give you something that's very relative to the natural gas industry. And so be sure, and I mean, right now we've got it out for free at wxrogue.com. Go out, check it out.
Well, the charts that are on there are going to be free. There's going to be a paid product behind, and that is going to add enhancement to your weather outlook. Plus, it's going to give you access to our weather channel.
But when you come to the Discord, you'll get access to listen to Brendan go on and talk about this, and it is really interesting, and it keeps me asking him questions. And very seldom do I get a chance to ask a weatherman questions that they know what I'm asking.
Yeah, very true. James, great to see you. James from, I think I'm going to say this the right way. You can correct me if I'm wrong. Across the pond. I think that's what the terminology is. So great to see you here. And when we talk about how to approach the market, and when we talk about the fact that there's two factors, fundamentals, technicals. James is one of the best technicians that I've ever seen in the marketplace, and he evaluates not only energy products but as well as other commodities, exchange rates, multiple things, and it's arcusfx.com. So, and he's developing a fantastic swing trading platform, and
there he goes again, stepping out way out there. He's talking about for the next decade. I'm pretty impressed with that, James. I mean, you're stepping out there for
Well,
10 years.
but he is bringing up an excellent point. There is actually a quote from an article that came this week, and it was, if AI continues its trajectory, that we're going to double our electricity usage in the United States. So the fact is that James is right. It's really going to be about what source, and that's part of the reason that I take a look at this one. This is the electricity matrix in the United States. You can see, pardon me, you can see that the majority of this is this big green, that is natural gas. And then you have nuclear here, and then you have coal. Now, we have heard time and time again since the mid 90s that coal was going to be eliminated from our power stack. It has shrunk, but has not disappeared. And the renewables, even though those have increased, those are still small. You can see on the top end of the chart, you have wind, water, and solar, and wind being the kind of pinkish one right there. That is really, renewables have a long way to go. Batteries aren't there. Natural gas is going to be the bridge. And if we do increase and truly double our electricity output, this is going to be, let me put this in perspective. If we double the electricity output, which was the quote, we're going up to 100 BCF a day on electric only demand in the next decade. That's if we sourced it all from, or no, not sourced at all. If we kept the same percentage of our power stack in natural gas. So think about that. We currently produce 101.3 BCF a day. That is very big. And James, thank you for bringing that up, because that's super important. And the computers, that's going to make the summer that much more. The one problem that they're haven't solved yet, and this is part of the reason coal is probably going to exist in the power stack, is solving for the storage and the deliverability of natural gas. So that is kind of what is happening on that side. So any thoughts on that, Bill?
I think when we look at that, there's a lot of predictions, and I think it was Yogi Berra says that predictions are hard, especially in the future.
Well, I should hope so, because I'm laying it on pretty thick.
But electrification of everything is going on right now, and so we need to be able to have a path forward. And what I see path forward, it's going to be natural gas, because they can't get nuclear done in time.
Right.
You figure you put that little box under your pillow at night, the guarantee fairy might come by and leave a quarter. Am I right, Ted? What's your point?
Exactly.
So there's a lot of dynamics at play. Feel free to ask questions. We're probably going to wrap it up in the next 5 minutes. So let us know if there's any questions. I do want to thank everybody for participating and joining. Rebelty, if I'm saying it right. Apologies if I'm not. James, so great to see you. I'm looking forward to the swing trading guide that is on Arcus FX. And then we have Powell or Powell. So I again, apologies, because I'm probably saying it wrong. And Richard.
How can you say it wrong? You say it different every time you say it.
Probably. Probably.
One of those have got to be right.
I think you're right. I think you're right. So that is what we are looking at, and this is part of Energy Rogue. This is part of what we do. This is really what we try and do to help educate, to help give people a better framework. And James, it's so great to see you. Swing Traders Guide is coming out soon, and stay tuned for that. And that's going to be at arcusfx.com. And I think you can go straight to, if you just Google 𝐅𝐫𝐸𝐴𝐐𝑠fx.com. Let me actually go to 𝐅𝐫𝐸𝐴𝐐𝑠fx.com. And this is our friend James from across the pond. Internet, come on, internet. So this is what is coming. You just go to 𝐅𝐫𝐸𝐴𝐐𝑠fx.com and it will take you straight to the swing trading blueprint. So that is what James has on the docket. I'm so excited to see what that has in store. And let's see, we got Rebel T. Don't underestimate renewables growth. I definitely don't. The renewables growth is growing at a slower pace than power growth. So if power growth slows, then I see renewables taking a bigger dig into natural gas. So maybe lagging. Yeah.
Also, the capital required for them to get to a significant level may not be as available. I mean, it's there now. A lot of people have gone from oil and gas to renewable, but it takes a lot of capital to put those things in place. And I agree with you. They overproduce, but they only overproduce when they can produce.
Right.
And in other cases, they extremely underproduce, and so it's not their ability to produce, it's their ability to produce on a consistent basis that seems to be the problem. And so the only thing that can balance that variability is natural gas.
Yep.
And so that's where I think the natural gas has strength. They're not going to stop growing because right now they're subsidized so much that they're going to continue to grow. If the subsidy goes away, though, and I don't know that it will, but if it ever goes away, that industry died like it did last time it went away.
Well, and one thing to bear in mind is that the renewables growth. Let me show you this. This is something to consider, and this is what some of the power planners are actually missing right now. If you look at the distance between, if you look at the megawatts from here to here and here to here, which each one of these dots is an hour. So this is 1, 2, 3, 4, 5, 6, 7 hours, and we're losing what, 45 megawatts that need to come from a different source. So it needs to be replaced by something. Now, batteries are going to replace part of it, but right now, this gap right here is being filled. Number one, there's smaller power demands at these hours of the day, but part of this needs to be filled from natural gas and coal. And right now, those are only swing suppliers. So batteries are going to make up for a piece of it, but don't look at it as a daily, look at it as an hourly, because at nighttime, you're not going to get any solar. And at different times of the day, you're going to have variable power. And this is something that a lot of power planners are missing on. We're trying to educate them, but it is going to take probably the next 10 years to balance that equation out. So, yeah. And renewables is where we need to go, 1,000%. However, if we aren't tolerant of blackouts and brownouts, there has to be a bridge, and that bridge.
Yeah, because the new mantra from them is that we need to use less electricity. I don't think that's going to happen. I don't think it's going to be one of those. We can't get to where we want to and continue to have the economy that we have now.
Right.
If we destroy the economy, we get growth, we can make us a third world nation. Sure, we can get there. I just don't think that's where people want to go.
Well, anyway, okay, so tell you what, down below, there's information. There's a webinar on our blueprint for trading natural gas and the things that we deem important for you to understand. And it is a combination of two things, fundamentals and technicals, and you really need both to effectively trade natural gas. Again, none of this trading advice. This is, we are not financial advisors, so on and so forth. You can read the disclaimer below and take a little nap because it is a little boring. So listen,
It's not boring. It's just anticlimactic.
yes. And let's see. Yes, I am too. I am long biased as well. This is only a matter of time. I will contrast that in 2022, I was short biased. So, so the thing is that we do try and study and we do try and watch over these things, and we really want to be in this together. So the thing is that for most of the bulls, it's been this for most of the year.
So you're telling me there's a chance?
And that's exactly how it's felt. So listen, folks, I really appreciate it. Thank you so much. Bill, any thoughts before we kind of wind down?
Oh, and remember, next Friday is Hawaiian Shirt Day.
There you go. So listen, folks, thanks so much. Thanks for tuning in. Please like, please comment. Really appreciate it. Really appreciate your participation. James, Rebel T, Richard, and Powell. Really appreciate it. And thanks so much. If you do leave a comment, I do my best to try and get back to you. And there is information down below on how to reach out to us and connect with us as well. So I
appreciate you guys.
Yeah, appreciate you guys. And we will see you at the next one.